Hey everyone, thank you so much for joining the Think Realty podcast. I'm Eddie Wilson, the founder of Think Realty. Founded it way back in 2013 because I love real estate so much and I wanted to talk to real estate investors all the time. And I still get to do that by hosting this podcast. And I'm excited for the guest that you get to hear today. He's a fantastic addition to the show, and we'll get to that in just a second. But first of all, I want to say a quick thank you to our podcast sponsor. This episode is brought to you by Real Property Management. Working with the right property management company can put more money in your pocket, not less. Real Property Management provides a higher standard of property management to make sure you're maximizing the return on your investments. Experience the real difference with Real Property Management. Visit realpropertymgt.com. That's realpropertymgt.com. So I don't know about you, but as a real estate investor, my head and my eyes and my ears are always up and open. I'm always looking for opportunities, especially in the passive space. And when I heard about what Joel and his team does, I'm definitely interested. I know you will be as well. So let me introduce Joel Friedland to the show. Thank you, Joe, for joining us.
It's my pleasure. Nice to see you.
Absolutely. So you're coming to us from the sunny state of Florida. However, most of your business is done in Chicago. Is that correct?
Yeah, we are hyper-focused on nothing but industrial property and nothing but the Chicago area.
That's awesome. In that focus, the fact that you go after industrial, I think it probably makes you, in our world, a very interesting guest, because my current group of investors, we've got about 1 million people that touch the real estate, the Think Realty platform at any given time. A lot of them have been investing for a long time. They've moved into this more passive space, and their residential has not been yielding like it has been over the past, let's say, 6 to 8 years, especially over the past 12 months. So I think they've all got their eyes up, their ears open, trying to decide, is there another asset class I should be considering? So before we jump into real estate, I kind of want to hear your story. Like, how did you get into real estate? Did you choose real estate, or did real estate choose you? Was it, how did that happen?
When I was a kid, when I was 14 years old, I started a landscaping business. And I went up and down the street where I lived, which was in a suburb called Highland Park, which is on the north shore of Chicago. And I went door to door, and I convinced homeowners to hire me to cut their lawn. And I got 60 or 70 lawns when I was 14 years old, signed up. And I hired kids to work for me, pushing the lawnmower and trimming bushes. And I loved watching what was going on with the houses. I saw houses for sale, and I saw agents bringing people in and out. And I thought, why am I cutting lawns? Real estate looks like a great thing to do. So from the time I was 14, I was entrepreneurial, but I didn't know how to get into real estate as a kid. So when I went to the University of Michigan, I took real estate classes. I also took some economics classes where I learned that each economics professor says the opposite thing of the one in the class before. And I was intrigued with the real estate. And when I graduated, I found a guy just from a friend of a friend who was looking to hire a property manager for an industrial real estate portfolio of 84 buildings, 6 million square feet. It was 1981. Interest rates were 17%, and he had 9 vacancies. And when I met him, he said, "So, kid, how would you fill up industrial buildings? I know you don't know anything about it, but we'd like you to manage some properties and help us with some leasing." I said, "Well, simple. I'd go door to door in the neighborhood, and I'd find tenants who are nearby and see if they wanted to move into your empty buildings." And he says, "You are hired." That's how I got started.
Wow. So what year was that then that you really got started in real estate?
So 1981 is when I met Milt Podolsky. It was a family business, not my family. I'd never met them. It was Milt and his 2 sons, Randy and Steve, and another guy named Richard, and they became my mentors. I worked there for 10 years, starting in 1981. And the first year I went door to door, and I made 37 leases.
Wow.
I was living at home with my folks, and I'd go home and I'd say to my parents, "Hey, I leased another building." And they'd say, "Is what you're doing like legal?" It's like, how are you doing all this? And the answer was, I think I was the only guy in town literally going door to door. I was
Sure.
22 years old. I had nothing to lose.
I think if you went door to door today, you'd still be the only guy going door to door to try to lease up industrial space. That seems crazy, but
I've taught
obviously
a lot of
effective.
guys how to do it.
Yeah, that's
Yeah,
awesome.
yeah, yeah.
Now, so talk to me about industrial space as a whole. Why should someone even choose that asset class? Or, I know that you even allow passive investors to kind of invest with you as you guys do it for others. Why is that an attractive asset class?
Well, it never was really even known as an asset class. It was sort of like a hidden asset class. People knew about retail, they shopped in stores, they knew about residential, they lived in an apartment or a house. They saw office buildings, but industrial is tucked behind other types of real estate. So most people don't know about it. But over the past number of years with the internet being as big as it is, people are ordering products to be delivered to their homes, and e-commerce has just driven industrial to just grow like crazy. And everybody who distributes a product from a warehouse needs a warehouse, and that's industrial. And so our vacancy factors are very low. And because it's such a different kind of a product, our cap rates are higher and our yields on our investments are higher. We don't buy anything unless we can get an 8% yield cash on cash. And by the way, we don't do mortgages. And I'll tell you the reason for that is because in 2008, which was my fourth down cycle, I got killed. I had 50 buildings, I had 300 investors, and I had a lot of mortgages. And what I learned is that debt is a double-edged sword. It can make you a lot of IRR, but it can also take away some of your equity.
Sure.
So at my age, which is 63, which is how old Milt Podolsky was when he hired me, so I keep comparing myself. He was such an incredibly vibrant guy, and he taught me that the whole thing is about relationships. So I built relationships with owners of industrial properties in Chicago and with tenants, a lot of local investors. Some of them are nationally. My son and I are in Florida now. We're on a 1 month investor tour. We're seeing about 25 of our investors while we're here. And industrial is just something that isn't well known by most people, but institutions are flocking to it right
Right.
now.
Yeah. And your average lease time on these buildings are how long?
We're in B and C industrial. The A properties are those big warehouses that are brand new that you see along the tollways with the line of truck docks and offices on each side with a bunch of glass. That's called A industrial. We're in the B business, smaller buildings, lower ceilings, older buildings. And because of that, companies like flexibility. They like 5-year leases.
Okay. Yeah, that makes sense. And so, I've owned and invested in a few industrial, more warehousing space, and to me, it became evident as I own a private equity firm, so we've got some businesses that need warehousing space, and how difficult it is to find it over the last 2 years is incredible. I mean, it seemed like during COVID, all warehousing space went away. And it seems like they're building double. These massive spaces, but they're already pre-leased a year in advance before the shell even goes up. It's crazy how much in demand it is. And then the pricing on it seems to be crazy as well. I down in Florida, where I live now. Our industrial. I'm curious if this is like a national thing or if this is just Florida. Our industrial space, the warehousing space, we're seeing prices that rival like a B class commercial space that you would use for typically like offices, and you're seeing a similar pricing, which just seems crazy. But I guess it's just because of demand.
Demand is wildly out of control, and it's not slowing down. This is a strange little bit of our strategy. We mostly lease to manufacturing companies in our size buildings. They're usually 50,000 square feet and smaller. And we've done a study as of this past week. Rents as of today are 35% higher across the board, across the country for industrial than they were 2 years ago.
Wow. Wow, what a massive, massive increase. And because, I mean, it's obviously, it's basic economics, right? I mean, it's supply and demand. And because there's way too much demand for the supply that's out there, that probably hasn't ceilinged out yet. It probably still has a long way to go.
I talk to industrial real estate brokers every day. Yesterday, I'd say I talked to 7 or 8 of them. And I asked the question, how are you seeing it? What's going on? There's no slowdown. Users are the occupiers of buildings. They can't find buildings to buy, period. It's hard for us to find buildings to buy. We have 16 buildings now, and we'd love to have 60 buildings, but right now there's just not a lot available. Companies stay for a long time. Manufacturers can't afford to move, and we call them sticky tenants, and that's what we have in our buildings. They don't want to lose their employees, so they can't move far away, which means they have a very small number of buildings that they can choose from nearby, and there's almost nothing available. When I show a building to a potential tenant or a potential buyer, let's say it's a manufacturer who makes, we have a tenant who makes safety products for the welding industry. If I was to take them to the building 3 doors away, if they needed more space, I could say to Scott, who runs the company, Scott, listen, I need to punch you in the face. And he would say, okay, go ahead, but then how much do I have to pay for the building? Mm-hmm. So it's really crazy when somebody needs a building for their business. It's a tool for their business. It's not about a return on investment. So a user who buys an industrial building will pay whatever they have to pay.
Yeah.
Even if it doesn't appraise out, they'll just do whatever they have to do to get it.
Yeah, it's interesting. One of the businesses that we own is a coffee company. We roast coffee, so it's a coffee roastery, and are in desperate need of roasting space. You know, like we're roasting in a retail facility, but when we went out a year or so ago and just looked for, this is north of Atlanta, just a place to lease for the purpose of roasting coffee. You know, not a massive footprint. It was impossible. Like it was actually better to go buy adjacent or to go get adjacent commercial space, retail space. It was actually easier. But anyways, that's really fascinating. So you allow a lot of passive investors to do this with you. I mean, obviously, it's a very specific niche that you do. And so instead of an investor that maybe is a part of the Think Realty network that is thinking, how do I go do industrial? You actually provide a more passive path for them. Could you just explain how the process works? Is it more like a syndication or a fund, or how do you structure it?
It is a syndication. We do not do funds. We let investors look at the specifications of the building and the returns and the credit of the tenant, and they decide for themselves if they want to go in. We have a very low minimum because we think that people who don't know us may want to just get started. So we have a $25,000 minimum. Very few people do that amount. Most people are, let's say, an average of about 50,000. And more than any other number, investors are at a minimum of 100,000. But we invite them in to learn about what we do and see how we do it. And we tell them that we buy these things all cash, and it's a long-term hold for the sake of earning cash flow. The minute they go into one of our deals, if it's leased, and they mostly are, they start earning 8%, which is paid out 2% per quarter. And we try to buy buildings from people who need to sell. Very often we buy from families who used to own the company that's in the building and sold the company, made all their money on the exit of the company, and got stuck with the real estate, and the family doesn't want the kids who don't know anything about industrial real estate to inherit a problem. So we buy from those kinds of people. We also do sale leasebacks. When companies need some liquidity, we buy the building and lease it back to them. We usually have annual increases in the rent of 3% a year, and they're net leases. So we collect the rent. Our most recent syndication is a $2.7 million deal in Chicago, 33,000 feet. The rent is $230,000 a year. The management and other costs are $15,000. So we collect $215,000. We pay no bank, and we distribute that out, and that's exactly 8%.
Sure. And most of these buildings are single occupants. They're single tenants.
They are, for the most part. We have one building in the city of Chicago where we have the U.S. Postal Service has a warehouse, and it's next door to a warehouse for that grocery delivery company, Instacart, which is very odd because Instacart leased the building last year and they haven't moved in yet, but they're paying rent.
Wow, that's not a bad tenant at all, you know.
I hope not. They're not making money.
Yeah.
We've seen their financials.
Yeah.
I worry about creditworthiness of tenants.
Yeah.
I think they're going to be okay, but you never know.
Yeah, for sure. Well,
U.S.
that's great.
Postal Service is good though.
I think you've convinced me that I need to consider more industrial for sure. It hasn't necessarily been on my radar unless it just a deal pops up here or there. But I definitely am interested. I'm sure a lot of our investors will be interested as well. How can they get a hold of you if they have some level of interest?
Sure. BritProperties.com is our website. BRIT Properties, plural. And we have information. We actually have our offerings on the website, and we have videos. I didn't know about podcasts, so I made a video. I spent $40,000 on a video. It's a 2-minute commercial. I'm a moron, I guess. Anyway, it interviews some of our investors, and it talks about who our tenants are. We had a tenant that was on Shark Tank in a building. We have a tenant about to sign a lease that was on an Undercover Boss. And we've got some really great tenants, some not-for-profits that pack food for starving children in third world countries. We've got great tenants.
That's awesome. Well, very good. Joel, thank you so much. We're out of time, but I appreciate you being on the show today. I appreciate you introducing some awareness to our listeners and viewers on industrial real estate. I'm sure a lot of them will be hitting you up and curious about what you do.
Thank you. It's been my pleasure.
Awesome. Joel, thank you, and I hope you have a great day.
Thanks, you too.
One more quick thank you to our podcast sponsor. This episode has been brought to you by Real Property Management. Working with the right property management company can put more money in your pocket, not less. Real Property Management provides a higher standard of property management to make sure you're maximizing the return on your investments. Experience the real difference with Real Property Management. Visit realpropertymgt.com. That's realpropertymgt.com. One thing I want you to do today, I want you to go to thinkrealty.com/events, or just hit the events button and click on Houston. I want you to consider coming to the Houston event coming up in March. And if you'll use the password or the keyword podcast, PODCAST, then you'll get a buy one, get one free ticket. The tickets are already as cheap as I possibly can make them, but that'll give you a buy one, get one for being a part of the listenership on the podcast. And I want you to consider coming to that conference because we have done our best to put amazing content providers there. They're not there to sell you anything. They're there because we tapped them on the shoulder and said, hey, you have fantastic information. Will you come share it with our Houston guest? I hope that you'll take advantage of that show coming up and be a part of it. I'll see you there with a lot of our other resident experts that'll be teaching as well. And also, if you haven't gotten our magazine, we send it out and send it right to your doorstep. If you go to thinkrealty.com, you can sign up for the magazine subscription there, or you can pick it up on the shelves of Barnes & Noble that's closest to you. Thank you so much for being a part of the podcast. Connect with us on all the social channels, Instagram, Facebook, LinkedIn, and let us know how you like the podcast and if there's any shows or any topics you'd like to hear more about. We'd love to hear from you. Have a great day, and thank you so much for being a part of the Think Realty community.